Hey, what is going on, guys? What is happening? My name's Johnny. You've tuned into Rules for Rebels, and today we're talking about Bitcoin and cryptocurrency taxes. Let me start off here by saying I am not an accountant. I'm not a financial advisor. I'm not even necessarily an expert in this category, but I have been doing a little bit of research, have been trying to understand this myself. And as a business owner and somebody who has traded like stocks and things like that in the past, I do have some understanding of taxes and capital gains and whatnot. And I'm always kind of surprised when I read on like Reddit and Quora, a lot of misinformation is being given out there to people in terms of like what's taxable, what's not taxable. I know a lot of people are like really naive in terms of like, hey, I've never sold any cryptocurrency, but I heard I'm gonna have to pay all these taxes. Like, you're only gonna have to pay taxes when you sell cryptocurrency to fiat. So I guess my aim in this video is to as simply and briefly and concisely as possible kind of break down a lot of kind of the common misconceptions and or questions that you guys may have about cryptocurrency when it comes to taxes. Now, I have a couple things on the screen here that I'm going to be showing you guys as well. This is Bitcoin tax you're looking at right now. We're going to get into first in, first out versus last in, first out, and some of the other ways that you can maybe choose to report your gains. We're going to talk about some legislation regarding purchases under $600 being immune from capital gains. We're going to touch on an article here that talks about how you should report, i.e. first in, first out, last in, last out, etc. And then we're going to take a look at the capital gains rates so that you guys can kind of see, what you may wind up owing. Now, let me start off by saying I am not a financial advisor. I'm not an accountant. This is my advice, my understanding. I would recommend you consult your own accountant. And if you're dealing with like real money in the crypto space, I would definitely recommend having an accountant and like not doing your own taxes on TurboTax. Yeah, it'll cost a couple $100 versus, 50 or $80 for whatever TurboTax charges. But a good accountant will actually wind up saving you probably a lot more money than that. And you'll make sure that things are done right in the first place. Like I said, I'm kind of surprised by how much misinformation there is out there. When I read people giving like advice on Reddit or Quora and things like that, a lot of things are just flat out wrong that I'm hearing. And I see a lot of people who really, are really kind of confused and worried, like, oh my gosh, am I going to owe all this money? Well, if you haven't sold any cryptocurrency for fiat, you're not going to own money. You're not going to owe any money. But basically, this is just kind of my attempt to maybe educate people a little bit on this. Hopefully kind of clear up the picture for you a little bit. I know personally, I haven't done a lot of trading in the past because I kind of thought it was going to be like a shit show at the end of the year trying to figure everything out. Up until recently, there haven't really been a lot of good systems for figuring out your capital gains short of like going through an Excel sheet line by line and like attempting to figure it out. You have some programs like Altpocket and Cointracking.Info. And I've tried some of those. Cointracking.Info isn't terrible. It's not 100% accurate. Just recently downloaded Bitcoin tax. They charged me $19.95 for 2017, $19.95 for 2016. And I wasn't really doing any trading prior before that. It was more buying and holding. So from like 13 to 15, I think for, I don't know, it was $50 or $100, you can buy like a 3-year package. I don't need that one. I'm not an affiliate for Bitcoin tax. They don't even have an affiliate program. So I'm not saying this to get you to buy it so I make an affiliate income. I have nothing to gain by this. Let's get kind of straight into this. So first things first, if you hold Bitcoin or cryptocurrency for longer than a year, it's considered a long-term capital gain and it's taxed at 15%. I'm pretty sure about that. I don't believe it matters what tax bracket you're in. I think long-term capital gains across the board are taxed at 15%. And if anybody, if any of you guys are accountants or if I misspeak or say anything that's not true, feel free to correct me in the comments section below. If you hold Bitcoin or cryptocurrencies for shorter than a year, it's a short-term capital gain. And I believe this one depends on your tax bracket. So if we take a look at this chart right here, if you make $0 to $99,325 a year, you're going to be in the 10% tax bracket. So you're going to pay 10% capital gains. If you make $9,300 to $37,000 per year as a single person, or filing jointly as a married couple, 18 to 75, you're 15%. Are we right here? Here's what the current short term. Okay, yeah, this is right. Okay, if you make between 91,901 and 191,000 as a single person, you're at the 28% tax bracket. As a married couple, it would be 153,000 to 233,000. So you can kind of look at this chart. You know what your income is, so you kind of know where you fall in terms of capital gains. So in terms of like a little bit more strategy, in terms of like should you sell, should you hold, etc. If you hold your cryptocurrency or Bitcoin for over a year, you're going to pay significantly less in taxes. That said, a year is an incredibly long time in the cryptocurrency space. If Bitcoin shoots up to a new all-time high of $20,000, you may say, oh, I'm going to hold out of this for a year because I don't want to pay these huge short-term capital gains rates. But it's very possible 3 months from now, it's going to go from $20,000 down to $14,000, and that $6,000 you lost in the price declining is going to cost you a lot more than, an extra, 13 or 14% in tax rate would have cost you. So that's kind of a strategy that you're going to have to plan out for yourself. You kind of got to weigh that benefit. In terms of figuring out your taxes, if you don't do a lot of trading, it's going to be fairly easy, right? I do weekly dollar cost averaging. So what that means is every week I have a certain amount of money that every Monday goes into Litecoin, every Monday goes into Ethereum, and every Monday goes into Bitcoin. So, it's easy if I buy $5,000 worth of Bitcoin, or I buy one Bitcoin, and then a month later I sell one Bitcoin. And okay, I bought one Bitcoin for $5,000, I sold one Bitcoin for $7,000, I made $2,000. I owe 28% of that. Like that's pretty straightforward, right? But when I'm buying $50 every week, and then 6 months later I wind up selling $2,200, it gets a little bit trickier trying to figure out, okay, I had 15 buys for $50, but then I had the sale for this. So this is where some of these softwares and things like that kind of come in. Let's see, okay. So in regards to that, like I said, you have Altpocket, Cointracking.Info, and I recently bought Bitcoin Tax. I'll kind of briefly show you guys what that looks like. But basically what you can do is you can either pull Excel files like of your trading activity from either Coinbase, GDAX, Bittrex, Poloniex, Kraken, etc., and you can upload them into a lot of these sites. Most of these sites also have an API feature. So basically, I can give them access to my Coinbase or GDAX account. For anybody who's like, oh, I don't want to give any third-party access to my trading accounts, it's view-only access. So just to give you guys a quick example, there are trading bots out there that you can say, okay, I'm going to set this up to my Coinbase or my GDAX account. And when Bitcoin goes up 10%, it's automatically going to sell. And when it drops 10%, it's automatically going to buy. And you have a bot doing your trading activity for you. Now, you need an API access to do this. And when you do it, you're giving them access to trade, right? And that's kind of dangerous because you're giving somebody access to do something within your account. With Bitcoin Tax and Cointracking and a lot of these softwares, you're only giving them view access. So they can view the information in your account, but they're not able to make trades or not able to make transfers, etc. So if any of you guys are worried about that, I just wanted to point that out. I just got this Bitcoin Tax within like the past 2 days, and it's made me a lot more comfortable just in knowing that, okay, I will be able to figure things out at the end of the year. Coinbase does, if you go to your Coinbase account and click at the top, the Tools tab, there's a tab that's called Reports. Now, you can pull a report on all your buys, all your sells, your trading activity, your cash outs, and they do have one that, it says it's a beta version, and it's I think it's supposed to figure out your taxes for you or something like that. One thing to be aware of, because these numbers are flawed, it's not a perfect thing. If you're only buying and selling on Coinbase and GDAX, it's perfectly fine, right? The challenge is if you ever transfer money off of Coinbase or GDAX to either an external trading platform or even an external wallet. Let's say you have a Ledger wallet, you have a Trezor wallet, you have an Electrum wallet. The way that Coinbase's report pulls, if I send 5 Bitcoin off of Coinbase to my Trezor wallet, they're considering that a sale. In reality, that's not a sale. That's not a taxable event. But the way that the report shows up, it will show as if you sold 5 Bitcoin. And in reality, that wasn't a sale. So if you never transfer your money off Coinbase or GDAX, their report that you can pull for capital gains, may be accurate. I would still look over it yourself and have a tax professional look over it. But if all your activity is on Coinbase and GDAX, which it really probably shouldn't be, you should probably have a hardware wallet, but that would be fine. As soon as you start transferring over there, Coinbase's beta testing tax thing goes completely out the window. I know GDAX for a long time has had something that supposedly is going to help you figure out your losses and gains. It still hasn't rolled out. And I think with this recent IRS announcement, if you guys, I probably should have mentioned this earlier in the video, but if you guys haven't heard, a judge has ordered Coinbase to turn over user records between 2013 and 2015 for anybody who had over $20,000 worth of trading activity and or buys or sells and or transfer activity. In that example, I kind of explained how a lot of people are like, oh, well, that only affects rich people. Well, not really. Somebody who's a day trader and trades like $100 a day over 365 days in a year, that's going to add up to a lot of trading. Conversely, let's say somebody buys $5,000 worth of Bitcoin, and now they're into Coinbase, so to speak, for $5,000. They send that $5,000 over to a Trezor wallet or an Electrum wallet, so that a $5,000 transfer. So $5,000 buy and $5,000 transfer brings us up to $10,000. Let's say I decide, the price is pretty high. I think I'm going to sell this. I have to transfer it back to Coinbase, right? So when I transfer it back to Coinbase, that's another $5,000 transferred in. So we're at $15,000. And let's say I say, okay, I'm going to sell this. So I wind up selling my Bitcoin, a $5,000 sale, 5, 10, 15, 20. We're at 20,000. It's very possible I lost money. It's very possible I broke even. It's very possible I made a very small amount of money. But Coinbase is going to be reporting to the IRS that I had $20,000 worth of activity. Now, that's not to say that I have to pay $20,000 in taxes or even that I've had $20,000 in gains, but it's my responsibility to kind of notate what my cost basis is, what I sold for, and what my profit was, so that at the end of the year I can say, look, even though there was $20,000 worth of trading activity, I only made $300 and I only owe 28% of that. I maybe touched on this earlier, but I think I was giving the example of like a Shopify store. Shopify Payments, PayPal, all these guys. I believe it's if you do over 200 transactions per year and over $20,000 in sales, they're required to do a 1099 on you. So they're going to give let's say you sell $25,000 worth of product. They're going to send a 1099 to the government showing this guy had $25,000 come in. Now, let's say I was selling items for $100. Those items cost me $90. I turn around and sell them for $100. I make a $10 profit. Well, Shopify, PayPal, whatever, is telling the IRS I did $25,000 in sales. Well, I have to go through all these sales and say, okay, sale 1, I bought it for $90, I sold it for $100, that's only $10. Sale number 2, I bought it for $90, I sold it for $100, that's only $10. So out of that $25,000, I've really only profited to the tune of $2,500. So a little bit off topic, but just kind of want to kind of help you kind of wrap your heads around like kind of the record keeping required and why you want to keep accurate records. The next thing I wanted to touch on is like-kind exchanges. So right now we're kind of getting into, you might hear a lot of people say, I don't want to sell my Bitcoin for fiat because I don't want to pay the taxes on it. So a lot of people seem to be under the impression that if I take my Bitcoin, Bitcoin's up, Ethereum's down, rather than cashing out my Bitcoin for dollars, I'm going to sell my Bitcoin for Ethereum, or I'm going to sell my Bitcoin for Lisk or Arc or Stratus or MEM or whatever other cryptocurrency. And there is something in the IRS code called a like-kind exchange. Now, I'm not an expert in this. I'll give you kind of an example. So I believe there's something with real estate. So if I buy a house for $100,000, a couple years later I sell it for $200,000, I believe I would normally owe long-term capital gains on that $100,000 in profit. Well, I believe, and again, I've never done this before. This is just something I hear about. I believe there's something called a like-kind exchange, and I believe there's a time period on it as well. So we'll say, as long as I take the profits from that real estate sale and purchase another house within, I don't know if it's 90 days or 6 months, but as long as I purchase another house within that time period, my gains can be rolled into that next investment, and I don't have to pay capital gains on it. That said, I don't think I would be able to sell that house and then use the money to go buy silver coins because they're not like kind. So a lot of people kind of like to think or make the argument that crypto for crypto is a like-kind exchange, and until you go to fiat, you're not having to pay taxes or not having to pay capital gains. Every accountant I've talked to, most articles I read, I think people would like to think that's how it works. In reality, and I've heard some arguments as to why this is, but crypto for crypto doesn't seem like it's going to be a like-kind exchange. Typically, the IRS doesn't do anything that helps us or benefits us or favors us, and that's what a like-kind exchange would do. So I don't think that's going to be the case. So even if you sell Bitcoin for Ethereum, Bitcoin for Litecoin, whatever else, that is a taxable event that you are going to have to pay capital gains on those gains that you've made. Now, where things get even more complicated is, okay, now you send your money over to Bittrex and you start trading on there, and then you have all this money flowing through different exchanges and keeping track of what you bought at these prices. So that's where things can get really kind of complicated. But yeah, that's just one thing I wanted to touch on. I don't believe it's going to be treated as a like-kind exchange. In terms of how to calculate capital gains, I found kind of an interesting article that I thought we would touch on. So let me take you over to a Bitcoin tax report here. So here's kind of the different cost bases, right? So long-term capital gains. If we were to use the first in, first out method, the estimated tax is $2,258.60. If we were to use average cost, it would be $1,996. If we do highest cost first out, it's $1,400. And basically what this means is like first in, first out is whatever Bitcoin I buy first. When I sell, that's the first one that sells. Last in, first out is my most recent Bitcoin purchase goes against my most recent Bitcoin sale goes against my, I'm sorry, I feel like kind of a mindfuck here. My most recent Bitcoin sale goes against my first purchase. There's something else, I forget what it's called, but basically where you can pick and choose which sale you want to match up with which purchase. But I saw an interesting article which kind of explains this. Let's see here. So this article is from Brave New Coin, and capital gains on crypto, first in, first out, last in, first out, or specific identification. So Jeff Andrew Jr. says, see, I regularly receive inquiries around the country regarding how gains and losses on cryptocurrency transactions are taxed. Unfortunately, to date, the IRS guidance has been limited. Let's see the date on. Okay, so this is from November 7th, 2017, pretty recently. IRS guidance has been limited to notice 2014-21, which, while it doesn't tell us a whole lot, does make the following clear. For tax purposes, cryptocurrency is property and not currency. Unless you are in the business of selling cryptocurrency, the gain or loss from any sale of cryptocurrency is a capital gain or loss, similar to a stock, bond, or mutual fund. Point two has caused a lot of confusion. When a taxpayer sells a stock, bond, or mutual fund, assuming all his shares being sold are identical, he has several options regarding gain or loss. The most common of which are, he can record the transaction on a first in, first out basis, FIFO. This means if I own 100 shares of Microsoft and I sell 10, the 10 I sell are deemed to be the first 10 I purchased. I can record the transactions as last in, first out. This means if I own 100 shares of Microsoft and I sell 10, the 10 I sell are deemed to be the last that I purchased. He can record the transactions on a specific identification basis. This means if I own 100 shares of Microsoft and sell 10, I specifically identify to my broker which 10 I want to sell. Now, I wanted to get a little bit sidetracked. I know I'm probably going to lose a couple people because this part's kind of long. I did want to touch on something important at the end of this video, so hang on. There's a law being proposed that would end capital gains taxes on purchases under $600. So right now, if I buy a slice of pizza for $5 with Bitcoin, I'm supposed to figure out how much I've profited on that $5 worth of Bitcoin. And if I'm up 20% on Bitcoin on that $5 pizza, I should probably pay 20, 40, 60, 80. I should probably pay $1 in tax. Now, it's not really reasonable for people who actually spend Bitcoin to make them figure capital gains out on every purchase. So there's a law proposed that any purchase under $600 would be immune from capital gains taxes. And what's kind of cool about that would essentially allow you to live off of your Bitcoin profits without ever having to pay taxes as long as your purchases are under $600. And that's really interesting. I'm going to touch on that at the end, so stick around with me for that part. But getting back into the first in, first out thing, when selling a portion of a given holding of a cryptocurrency may have applied these same rules. Shouldn't all this, yeah. Okay, so essentially he's saying you would think that the same rules would apply to cryptocurrency as stocks, but he said that's not the case. Treasury Regulation 1-1012-1A sets forth the general rule for determining cost basis in a sale. In general, the basis of property is the cost thereof. The cost is the amount paid for such property in cash or other property. Let's see. In plain English, okay, so let's skip straight to the plain English. In plain English, that paragraph means that by default, when I sell a stock, I have to use first in, first out. The only exception is if I can make an adequate identification. An adequate identification is blah, blah, blah. Anyhow, he says it's doubtful that last in, first out or an adequate identification is going to be allowed in the absence, what should taxpayers do? So this gentleman recommends use first in, first out universally. This is the most conservative method, as first in, first out is generally the least pro-taxpayer method. So you are going with the method that screws you over the most. As you can see here, if, we opted for, highest cost first out, we'd only have to pay $1,400 in taxes, but first in, first out, we have to pay $2,258. So this is the most conservative. This one is the least friendly to us. But, if we're making money, it's not worth getting in any trouble or owing the IRS, fines for underpaying our taxes or whatever. It's hard to see the IRS would be less. Okay, so basically saying it's hard to see the IRS issuing future guidance that would be more friendly to us. So, it seems like first in, first out is what you want to use. On a wallet basis, less conservative for specific or for this. Okay, so he says if you use last in, first out, or specific identification, this is the most aggressive, and you're betting that both this regulation does apply, and if it does apply, it's an asset which can be adequately identified. So for all intents and purposes, unless you want to get audited or have some issues, you probably want to use first in, first out. And then lastly, this article is pretty brief, but there's been legislation proposed in the U.S. that would end capital gains tax on Bitcoin purchases under $600. A new bill introduced with bipartisan support intends to create a more fair tax structure for cryptocurrency users. Titled the Cryptocurrency Tax Fairness Act, the bill is seeking to create a new minimum purchase point at which Bitcoin can be used as a currency without payment of capital gains taxes. The bill, introduced by Rep. Jared Polis, Democrat from Colorado, and Republican David Schweikert, Republican from Arizona, will provide a relief point for holders of digital currency and will create legislation similar to that already in place for foreign currencies. So this part's interesting. So basically what this means is I kind of gave the pizza example earlier. Let's say I bought Bitcoin for $1,000. It's now worth $10,000. I've seen $9,000 in gains, right? So if I were to cash that out through an exchange, I would owe either depending on short-term or long-term capital gains, either 15% if I held it for over a year, or 28% for shorter than a year. So either 15% of $9,000 or 28% of $9,000. Well, what this law would do, not cashing out through an exchange, but just recently I bought a. We'll do this. Just recently I bought a wetsuit, right? Now, I want for any of you guys who've noticed the surfboard and stuff, I learned that there's Lake Michigan surfing. I'm a huge fan of, spending time outside in the summer, going to the lake and stuff. I really got into paddleboarding this past summer, so I bought a surfboard, bought a wetsuit, decided I'm going to do some Lake Michigan surfing. Maybe I'll take you guys along with me one day. And I was actually contemplating starting another video on this. I'm getting a little bit sidetracked, but my point being, if I bought that wetsuit for $300 with my Bitcoin, even if it's that same Bitcoin that I bought for a grand, it's now worth $9,000. I've seen a pretty good increase on that money, but because I make a purchase of that wetsuit and it's under $300, I'm not required to report capital gains on that. So what does this mean for you? Well, this essentially means that you can spend your Bitcoin and live off your Bitcoin without paying taxes. So if you want to cash it out of an exchange and get dollars, you're going to pay 15% or 28%. If you want to use it to buy your groceries, to pay your electric bill, to buy a wetsuit, you're not going to pay taxes on that. Point being, you can live off your Bitcoin without paying taxes. Now, this isn't currently the law. It's proposed. This article was from September 8th. I haven't really followed up on this law to see if it's gone through. I'm really kind of surprised by this because generally the government doesn't do things that are helpful or friendly or favor us. And I could also kind of see this. I don't know if it's being abused, right? Like, I know a lot of times people hate on Donald Trump and other people for like working within the tax code to avoid taxes. Like, if you're working within the law, you're allowed to avoid taxes. You're not allowed to not pay taxes. So if there's a law that says I can buy things for under $600 and not pay taxes, you better believe I'm going to buy things for under $600 and not pay taxes on them. And I'm surprised the government would allow this, because then wouldn't everybody just start living off their Bitcoins instead of cashing them out? Here's the other part, though, because I could see this being abused. For purposes of this subsection, all sales or exchanges which are part of the same transaction or a series of related transactions shall be treated as one sale or exchange. So I'm not sure exactly what they mean by that or how detailed they'll go, but I'm going to give you an example. So we'll say, and not to say that people wouldn't skirt this or whatever, we'll say this wetsuit costs $500. These wetsuit booties cost $200, and this hood costs $100. Now, if I'm going to get equipment to go surfing, normally I would probably go buy all these together, right? So 5, 6, 7, we're at $800. I believe what this kind of subset of the law is saying, and this would probably be more applied to business and things than me buying a wetsuit, but at least in the spirit of the law, I'm not allowed to go into the store and buy this wetsuit for $500, walk out the door, come back in, buy this for $200, walk out the door, come back in and buy this for $100, just to kind of circumvent the law and try to keep all the purchases under. They're saying that, like, in that scenario, like kind purchases, all my wetsuit equipment, which was kind of intended to be purchased at one time, I can't purposely split up into multiple transactions just to kind of take advantage of this law. So that's kind of really all I have for you guys today. Again, I'm not an accountant. I'm not a financial advisor. Don't take this as financial or accounting advice. This is just kind of my opinion. It's the things I've researched. If anything I said has been, if you disagree with anything, if I misspoke on anything, feel free to clarify or give your opinion or correction down in the comment section below. Just to kind of recap what we talked about, because I know this has been kind of a long video. Bitcoin or cryptocurrency held for over a year, taxed at 15%. Bitcoin or cryptocurrency held for under a year, short-term capital gain. I'll link to this chart in the description box below so you can see where you're taxed. But, you know, probably somewhere around 25 to 33%. Weigh the benefit of taking profits when Bitcoin is high versus purposely waiting for over a year to cash out for lower tax rates. Don't be scared. Okay, one other thing I wanted to touch on. Don't be scared to do trading. I was kind of... Trading is very volatile, right? You can lose money. I wouldn't recommend anybody do margin trading or anything like that. But even like swing trading, like there's a lot of volatility in a coin. In the past, I was kind of scared to do too much trading because I'm like, this is going to be just a shit show at the end of the year tax-wise. This past Thursday, I bought 100 Litecoins. With this one, Litecoin was swinging up and down. Within about 2 hours, those Litecoins were up $3. I sold those, so 100 Litecoins times $3 made $300. Later in the day, I set a very low limit order that I didn't think was going to hit, but it did a quick little kind of, I shouldn't say flash crash, but we'll say flash crash for lack of a better word. Picked up some Bitcoin at 9,500. Bitcoin has surged up to, what, I think over 11,000 last night or this morning. I'm probably going to sell that and maybe try to catch something else on a dip. So now that I know there's programs like Bitcoin Tax and others that will easily help me figure this out, I'm not as hesitant to trade because I know I'll be able to figure out accurately what I owe at the end of the year. So that was, you know, that's kind of helpful. Like kind exchanges, if you sell crypto for crypto, it is a taxable event. Don't think because you go to Tether that you're not going to have to pay taxes on that transaction. In terms of how to calculate capital gains, first in, first out seems to be the, I don't know if I want to say the only acceptable way, but it seems to be the prudent way to go. And keep an eye on this law about capital gains exemptions for purchases under $600 because that could really help Yeah, I think it would be cool for two reasons. A, it would help a lot of us legally avoid some taxes. And B, it would encourage people to spend their Bitcoins instead of just hoarding them, right? Because I know a lot of people don't want to spend their Bitcoins because Bitcoin continues going up. A lot of people don't want to cash out because then you got to pay taxes on it. But if I could spend my Bitcoins without incurring taxes, I'm making money. I'm getting my items for cheaper. It encourages the Bitcoin economy, and I think would actually spur the real economy as well, because you'd have a lot of, they always say, most people spend the money they get through tax rebates and whatever else. So people are going to spend their crypto profits, and that's going to kind of, in addition to helping the crypto economy, probably spur the real economy as well. So hopefully you guys enjoyed the video. If so, give it a thumbs up. Subscribe if you are not subscribed. Feel free to share this video on a Bitcoin forum or subreddit that you like or whatever. And if you guys have any questions, if there's anything I didn't address, if there's anything I wasn't clear on, feel free to drop a comment in the comment section below. We recently crossed 70,000 subscribers, guys. Thank you so much for that. I've kind of slowed down a little bit, but we're on the road to 100,000. I'm hoping to get that silver play button sometime here soon. So thank you guys again so much for everything. I'll catch you guys on the next video.